Hello everyone, welcome back to the channel, best place for long-term stock investors. Finally, we got a name, John, and we're going to call it the FIRL Quick Dive.
Quick and dive.
So if you all don't know, we actually do deep dive sessions where, it's a paid session where we go super deep. This one's not as deep, but it's still very much as valuable. So we're going to call it Quick Dive. Okay, so what we're going to talk about today, the first is, of course, the restructuring plan for Berjaya Corporation, followed by QES Groups, quarterlies, and then lastly, we're going to talk about Sapura Energy's boardroom refresh.
Ever wondered if you can make 10x on a stock investment? We're going to do a free training and the links are in the comment section as well as the description below, and I will see you there.
Okay, first, B Corp or Berjaya Corp, right? So just some brief history, right? In March 17, Jalil Rashid was actually appointed as the first non-member CEO of the Berjaya Group.
Probably the youngest too, I guess.
Yeah, one of the guys is a very accomplished man.
Yeah.
And as a result of that appointment, the stock price went up something like 140%.
Woohoo!
Right, that's pretty massive. Now, why was he brought in? Now, actually, before that, I don't know if you know it, John. I think what is fascinating about this event is that not only is it a non-family member CEO, is that Tan Sri Vincent Tan, the owner, actually, I don't want to say the word removed or ousted, but replaced his son.
Yes.
Right?
And they both stepped out of the day-to-day business, I guess.
Yeah, I think that is so amazing for an Asian company. It's just so rare.
Yeah.
And now I want to talk a little bit about what is the plan that, first of all, what's the reason, Jalil is involved?
Yeah.
I think the first reason Jalil was hired is because they needed to reduce the number of, you can call it business segments from 10 to 5. So I'm not going to read out all 10 here, but basically the 5 that they're going to reduce it to be, the first would be retail. So this is your Causeway, your Secure Express.
Yeah.
And then you have hospitality hotels, Berjaya.
Yeah, that's right.
Berjaya, Times Square and all that.
Yeah.
Services, Enviro Parks, which is, actually I'm not even sure what it is. Then you got your digitals, your fintech. I forgot one very important one, which is restaurants. So Starbucks, KKR, Krispy Kreme, Joybean, there's so many.
Yeah, Wendy's.
And the last one is real estate. So real estate, we got a lot to talk about later on because that's where a lot of hidden value is.
That's right. How to unlock all those values, actually.
Correct. So, to begin, right, I know you have some sort of history with Berjaya Corp.
Oh, yeah.
So you want to share with us what the history is?
It was actually very lucky because Berjaya listed their 7-Eleven called Berjaya Retail. I don't know now what is it called, right? So they listed it at 50 cents. Vincent Tan bought more at 55. The price started falling down actually. Okay. All the way down to 38. And that was one of the first or earliest stocks that I adopted value investing, so-called practice, right? Keep on buying. I didn't really know how to read a financial statement then. Okay. All my friends who followed me, they lost money. Because they bought at 50 cents like me, but then at 40 cents, they bailed. So I went in at all the way down to 38. I think that time, no such thing as portfolio allocation.
Yeah, it was whack only.
I only had one stock, which was Berjaya Retail, right? And after 6 months or so, Vincent Tan said, hey, you guys don't know how to value my company. So he took it private at 65 cents. I made my first real value investing profit then 9,000.
That's probably at that point in time maybe 2 months of salary.
Oh yeah,
it's not bad.
No, about a month. But it was within 6 months of work and it was like wow, this is how,
So I think that's very interesting. That's special situations.
Correct,
we call it.
Really special situations.
But I think for this case, right, the reorganization, first of all, I think is the right move.
Correct.
But we were discussing before this about Berjaya Corp that one way to compare Berjaya is to see, okay, where is Berkshire at?
That's right. That's right.
Because it's somewhat similar.
Yes.
But for those of you who don't know, right, Berkshire has many sources of income. But as of today, Berjaya only has basically one. There are many sources of revenue.
But sources of income?
Yes. So on your slides, John, right? you can see here, right? Really, the one on the right, right?
Yeah, on the right.
Operating profit, right? Financial year 2020 is mostly dominated by gaming.
Yeah.
So basically, Chinese people. Right? Toto.
Thanks to all the pent-up demand and excess cash from moratorium, from not being able to go to Genting.
And everything else is suffering as a result of like your restaurants, your causeways, all that. It's not doing as well as before, clearly. And before, I think one question that the CEO will need to ask is, what do you get rid of? So when you look at Berjaya today, right, is there anywhere you would say, we don't really need it, or maybe it can be put on the back seat a bit?
To be honest, a lot of their businesses, in my opinion, and it's a very surface opinion, is that they're very correlated in the sense where, as I was mentioning to you before this, I'm a big causeway, client. There's always a lot of repeat sales. Their food business, it's something that it's in a way they could enhance the same network, because it's in a way it's partially consumer staples, consumer discretionaries muddled into one, but it touches everyday. It's a front-facing brand. It touches everyday lives, and you talk about the tourism and leisure business as well. There's so many synergy. I mean, I'm not an excellent businessman, but I see there's so many synergies they could have tapped if they had run the business well. But then again, I do realize one thing. The way each business is actually generating income, the metrics to measure them are very, very different. Like if you run a hotel versus running Causeway, for example, the way you benchmark yourself, the way you manage efficiencies and all that is very different. So I we were having this chat, MJ, remember we talked about why don't they just run it like a mini Berkshire?
Yeah. And here's the challenge. Right? Here's the big difference. Yes, on the surface, they are a conglomerate, they acquire companies and all that and brands. But there's a big difference. When Berjaya buys a brand, it's like, for example, a franchise.
That's right.
And then they will try to hire someone to run it, right? To use a CEO.
Yeah.
And so it's a more top-down approach, I would call it.
Correct.
Now, if you look at Berkshire, it's very, very different. The way they acquire private business, I'm speaking specifically for private businesses.
Correct.
Because that's the like-for-like comparison, right?
Yeah.
What I see is that Berkshire will analyze, Warren Buffett will analyze the company.
Yes.
And then he will want to know what the management is.
They already have great management in a way.
Correct. They already have great management. And then say, hey, I will buy most of your company or all of your company, but I'll let you run it. Because you're so passionate about your job, you so enjoy it.
Yeah.
Warren Buffett, have the reputation that I don't kacau you whenever you run your business.
Correct.
So you get to run your business, still have some sort of stake in it, but then you get this big windfall of cash that I'm about to give you because I buy your company.
Correct.
And that's a very different system from Berjaya.
Which is purchasing franchise.
Yes.
But at the same time, they have to vet through and hire these entrepreneurs who have probably not proven themselves.
Yeah.
And it's the reverse case for Berkshire, where these guys already built it from scratch. What's the lady's name? Nebraska Lincoln Furniture.
Miss Rose Blumkin.
Rose Blumkin. Built it from scratch.
Yeah.
Had to undergo all this competition left, right, center. So she's already proven her grit. Whereas here you buy the brand, a McDonald's or a Starbucks, and then you have to find a manager.
Yeah. It's not like you can get Howard Schultz for Starbucks.
Oh yeah, exactly. If you can get Howard Schultz, then bonus.
He is your boss. You're not his boss.
Yeah, exactly. Yeah.
So I think that is the biggest challenge.
Fair point. Yeah.
So now, because of that, right? So they buy all these companies, whether you're talking about the hotels and all that. Which, by the way, actually, quite frankly, a lot of the resorts in the hotels also, they are not must-goes. Like I don't have to go to Berjaya Times Square. I think that's one problem as well, right? I mean, there's a lot to talk about Berjaya.
They used to own Four Seasons though.
Yeah, they sold it, the Four Seasons in Kyoto.
Yeah.
The Japanese one.
So they sold it. I mean, I was a bit perplexed. Why? Probably, I don't know whether it was money making.
But actually, that's the thing about hotel, right? Like, unless I'm looking, let's say if I'm looking for a 5-star, then there's some branding behind it. But let's say among the 5 stars, right? How you choose between Shangri-La,
or
Hilton,
Marriott, or the W?
Or the what's the difference, right? So I think that's going to be a huge challenge, and it's important because a lot of the value when in interview, right, with I can't remember with who, but Jalil said that one of his core goals, apart from restructuring, which by the way they tried restructuring 3 times before, right? In 2001, 2005, 2018. So clearly this is the fourth try, and they obviously know it's not easy. That's why they're making this drastic step right now. But I think because of the land that they have, right now they are trading at 0.4 times book. And I can't remember how much land they have. I think on the slide.
On the slide there is, here.
So right now, they have not revalued the land. Right now, the total is about 1.2, nearly 1.25 billion. And Jalil thinks he can go up to 7 billion. Right? So if at 0.4 book, right now it's 1.6 market cap, 1.6 billion market cap. So 1.25 goes up to 7. That's 6x.
Jump.
Right? So it's, that's what he's implying, right?
Yes. Just this is purely just based on land revaluation. You're not talking about, revamping all the other businesses and making it more accretive.
But of course, the challenge is because the companies has not been run to its maximum potential.
That's right.
And the gaming arm is basically pulling all the weight. I think in not pre-COVID times, guys like Causeway, their consumer segment helps out a lot. But I know what the likelihood is it when it comes to actually turning around? Because I think even with the restructuring and all that, that's just more of a very big picture approach, more of a strategy. You are just changing the pieces, the chess pieces. But then each of the chess pieces, the rook, the knight and all that, will have to make their own moves. And I think that you not just need one Jalil, you need several Jalils.
Actually, great point. And maybe we need to talk a little bit about Jalil's history. You know, when for those of you who followed corporate news, you realize that he was in a way ousted from PNB because of some fake credentials and all that. But here comes the point of a great manager or great leader. You somehow need to make your lieutenants feel empowered. And that's not an easy task because he's someone like, I think he's 38 this year?
37.
37, 38, right? And most of these businesses, I would assume, are mainly staffed by the boomers.
Yes.
Yeah. So he would be going against an uphill struggle to try to change that culture.
And there's 10 board members, something like that.
Exactly. And even though even though you put all these structures in place, in Shell we used to call them corporate speak. Corporate speak, right? But the implementation and the action really boils down to the character of the leader. Because how would these lieutenants feel not threatened? That's one.
Yeah.
And then secondly, how would they be adaptive to change? Because in this new world where it's VUCA, a lot of things will come at you that you wouldn't even, there are so many incumbents that have been displaced, right? That you don't even realize it, Yeah. So I think let's see how maybe he takes things one at a time, see what are the businesses that he focus on first, see whether he can turn around the results, see whether he can change around those businesses, and then we can make a judgment call from there. But just on the land revaluation alone, the scary part about this is value traps.
Correct. Okay? Exactly.
It's always value traps. They say, oh, you're trading at 0.4 book. But then how can you accrete that value? That's another story altogether. Yeah.
So hopefully he becomes the next Satya Nadella.
Oh, yes.
Right, for BJCORP. I think the last few points I want to make also as a shareholder, if you are a shareholder or thinking of becoming, is that one thing that I think they can really do well, and if they want to, I wouldn't say copy like for like, but really mimic Berkshire in some capacity, is to have no dividend policy. Because they really need to strengthen the finances. They need
retain
to
everything to retain earnings, and then just.
But then you could also argue what would that do to the share price, right? So we'll see. As a shareholder, or if I'm were to be a shareholder, I think that the upside looks very interesting. I wouldn't say it's that much bigger than the downside, but I want to say it is probably slightly bigger than the downside.
You think can it go any lower? From where
of course, any stock can go. Who's to say that Rashid will be still here, Jalil will be still here in 1 year, 2 years? You just never know, right?
Yeah.
When he was at PNB, do you expect him to leave that quickly?
Yeah. And the other thing that triggered me when you said that was Vincent Tan has left and reinstated himself before as well. Yeah. So that is also another worry thing.
I think that the main man will be Tan Sri Vincent Tan.
Yeah.
Right? Whether he clearly he has had so much success. Clearly, I wouldn't bet against him.
Yeah.
but it will be key because he has to let go the same way Steve Ballmer and Bill Gates let go of Microsoft to Satya to work his magic. Yeah. So those are our thoughts on BJCORP. It's a long one. If you're enjoying the video so far, remember to give it a like, comment, subscribe. All this will really help us with the algorithm so that more people like you get to watch videos like this. Of course, click on the notification bell as well so that you know when fresh new videos are out. Okay, now we talk about QES Group Berhad, which is a stock that looks quite similar to Vitrox, trying to be a Vitrox. Basically, why we're talking about it is that on the 19th of May, they basically announced their first quarter 2021 net profit grew by 176% year on year. Who said Malaysia don't have growth companies? Right?
Netflix kind of region growth.
Yeah, and over the past year, it has gone up 4 times.
Yeah,
nearly 4
I think
times.
20 cents to 80 cents.
And the year-to-date gain is also about 3 times, right? It's been pretty massive, right?
Yeah.
So as a front disclaimer, are you a shareholder? I'm not a shareholder.
I'm not a shareholder.
You used to be.
Yeah, you used to be,
right?
but no.
But at least you gained something. I hope you made some money on the stock.
Yeah, I did gain. But at the same time, I think I'm setting my bar a little bit higher for quality, longevity, and sustainable companies. So
that is a keyword.
Yeah.
You are setting your bar higher for higher quality companies.
That's right.
So that would imply, John, for those of us who are a little bit smarter, that you do not see the same kind of qualities in QES perhaps with a Vitrox. Am I right to say that?
Yeah, exactly.
So, explain.
Yeah, so for those of you who don't know QES's businesses, I think today in the age of Google, there's no excuse for you not to know. But for those of you a little lazy on the keyboard and the mouse, then they're actually, they started off as a scientific equipment trading and distribution company. And they still are. Yeah.
So like lab equipment.
So you talk about, all your Chang'e microscopes and all that kind of thing. But what they did on the side was start something of an automation system solutions provider, which is in a way the backyard of Vitroxes and the MEs and the ATE guys. Yeah, the ATE guys.
Automated testing equipment.
Correct. And what they recently announced as well was a joint memorandum of understanding. I have to be very clear, not even a joint MOU, to think about assembly of electromechanical parts. So, but it's still an MOU, nothing concrete, not even a JV, not even a subsidiary. And I think it got the market talking because it's like, oh man, it's going to be another ATE with the likes of Vitrox. But it's if you dig into the numbers, it's quite evident that they are nowhere close to a Vitrox. And why I say that? Gross margins, you're talking about high 20s or something.
Wow, no, I mean like ATEs are like 50,
exactly,
60%,
exactly.
Right? 40 to 50%.
Yeah. Correct. And then the next thing that triggered me was also their net margins. So even though their net profit jumped, it grew on the back of revenue. So it's about 8 to 10%.
Okay.
Net.
Okay.
Yeah. So
looks more like a EMS, huh?
Exactly. So remember earlier I said about the sustainability and longevity, right? So ATEs, why are they premium in the sense they have their own IPs. They developed their engineering know-how over many years. And I'm not saying that QES can't do it.
Yeah.
It's just that it's yet to be proven.
Right.
Yeah. You need time to actually build that kind of capability, that kind of know-how to be able to create a product in the thing.
In your estimation, is that the reason why they don't have the same kind of margins as the bigger AT guys?
Yes, and if you look at the breakdown, their manufacturing is only making up about 13 to 14%.
Right.
Whereas a big chunk of their revenue or their sales today, 86% of it is still coming from product distribution, which means they buy something, third party, and then they distribute.
It's just trading, it's just middleman.
Yeah, exactly. Right. Of course, they would argue that says that I have the technical know-how, to service, but not to build. It's a very different thing. It's a very, very different thing.
Yeah, service you just have to deal with the outside of the...
Yes. Someone. Maybe they can start reverse engineering all this equipment that they sell, that they trade, but obviously it takes time. And it's not to say I wouldn't go back and buy it again, but it has to be proven to me.
Let's say right now at 50 times earnings, clearly the market is valuing it because of the MOU.
Correct.
Now, when did they get MOU?
I think it was in April, if I'm not mistaken.
Okay, but then it was interesting is that it was going up before that. But anyway,
yeah.
So let's say the MOU turns into a real contract.
Yes.
Right. What, in your estimation, would that look like?
It's still a manufacturing contract, so it's more of an EMS kind of contract. It's not really, you get what I mean. So okay. I mean, we love this space, semiconductor space. Maybe we looked at it so many. We're not to claim that we are super experts, but we've seen enough numbers to know what makes an ATE, what makes an EMS, right? And if I read the MOU clearly, it's a contract manufacturing. So it's like
an OEM kind of situation.
Yeah, it's not an ATE kind of trucks kind of space lah. So
it might turn out becoming, I don't know, an OSAT maybe.
Yeah, maybe,
right?
Yeah.
But do you think that, like, how much would it add to, let's say, the bottom line or the top line, whichever numbers? Like
to be honest, I wouldn't know because they don't even mention in the MOU what's the size, capacity, nothing. It's
just a letter to say, hey, guys, get excited. Something's happening.
Get excited, and then we're gonna work in good faith to try to figure out something. Yeah, so there's nothing to base my evaluations on.
Right. Yeah. So if you're a shareholder right now, what do you think? What would be your course of action?
I would say the valuations are pretty rich.
Yeah, right. Okay.
And what I noticed is being shown on the screen right now.
Okay.
Is that their main shoulders are dumping.
Yeah.
Wow. Yeah. And I wouldn't say, I think dumping has a very bad connotation to it, right? I think disposing, I think that's the official word.
Sometimes you just want to buy a house.
Correct. But I also realized on my way here before the recording, I also realized that they listed in 2017.
Right.
So the promoters may have had a moratorium
which they can sell right now.
Yeah. So this may be the first window of opportunity for them to sell.
That makes sense.
And also, to be fair, it was not a significant chunk. They still own significant chunks. I think Mr. Chew still owns about 30%. He only disposed about less than 1%. But it's still in the millions of shares.
All right.
Yeah.
Okay, that's it for QES?
Yeah, that's it.
All right. Okay, finally, we talk about a pretty popular stock. People have been asking us about it for like
donkey
the past 4 to 5 years already.
Yeah.
In fact, you have very interesting stories about Sapura.
Oh, yes.
In fact, you indirectly caused someone to lose a lot of money because she didn't...
phantom what the message was.
Yeah, you were saying, you used the word good. And then she took that to mean, Sapura is good. Then exactly. And lost a lot of money. But that's a story for another day.
Yeah.
So what's happening to Sapura, right? Basically, Anwar Taib now will be replacing Tan Sri Shahril, who has been there for, quite a while.
Yeah, the founder.
As CEO, in March 2023, right? Yeah. So they also had a big boardroom refresh.
Yes, right.
Right. And so this is a change. Now, why there's a change? Obviously, because of the debt situation. Right. I know enough about Sapura to know that basically they got really bullish during the oil run from, let's call it 2010 to 2014.
That's right.
Bought acquired a lot of companies, wanted to be essentially a total asset solution provider.
That's right.
For the whole upstream business, maybe even midstream, I don't know.
Yeah.
And they bought Seadrill, they bought, basically spent a lot of money, borrowed a lot of money. And then, of course, as with all things, commodities, if it goes up, it will come down eventually and it will go up again. So in 2014, they had that big crash, $120 per barrel down to 2015, down to like something like 20 to 30. So while companies like maybe the plastic guys and the airplanes got a big, advantage, obviously the guys in oil and gas will face the downhill. And so Sapura was not spared from that.
Yeah.
And so imagine they take on so much debt on what they thought were productive assets, then those assets became unproductive.
Yeah.
So now, what do you think of this refresh in the board?
They brought on all the heavyweights, to be honest.
Heavyweights, okay, explain.
Yeah.
The only thing I know is that Anwar Taib, Dato' Anwar Taib, is ex-Shell, ex-Petronas.
Yeah.
So clearly he has the pedigree from a more corporate setting.
Yes. And even more than that is that he started off as a technical man, not so much a commercial man.
Oh, that's good. That's interesting.
So a bit of history about Dato' Anwar, what is not covered in the press.
Yeah.
He's actually a wells man.
Yeah,
so he's a wells engineer. He started off wells engineer, became regional wells manager. And then his next move was actually supply chain. So he was regional supply chain, then be rotated to HSE, and then only then he became the chairman. So very well-rounded experience. He knows the depth as well as the breadth of the business. But what got me really looking at the board was that they got everyone else, virtually the who's who of the Malaysian oil and gas industry is on the Sapura board today.
Wow.
Yeah, literally is the who's who.
And for you guys watching and listening, right, I'm going to go back to my screen. Yeah. And just to build on that, right, the reason they need the heavyweights, right, because equally as heavy is the share price.
Oh, yeah. And then at peak was $3, right?
Yeah, 2017 to today is like down 93%, right?
Yeah.
So you definitely need the best you can think. The Avengers are essentially of the oil and gas industry.
Correct. They need the Avengers to come in and try to rescue this company. So when I say who's who, I'm not going to go background of everyone, but Tan Sri Samsul, previous CEO and chairman of Petronas. You've got Dato' Ian John Loh, who is former chairman. So when before Anwar was the chairman of Shell Malaysia, was Dato' Sri Wee Yao Hin. So Wee Yao Hin, then Anwar. Then after Anwar stepped down and moved to Petronas, Dato' Ian John Loh took over.
Right.
So can you imagine now they are bringing all these guys together? They brought in Bernard Di Tullio, which is Technip, Malaysia, one of our largest Shell's largest contractor. And then, Tan Sri Sarah himself stepped down. So in a way, I was trying to figure out why they brought in so much heavyweight. And if you look back at the capital structures and the debt reconsolidation, PNB now owns 40%.
Wow. Yeah.
Yeah. And Tan Sri Samsul, in his chairman's address, he actually said that he feels his responsibility is actually more towards PNB and the minority shareholders of PNB. Those who buy the ASBs, ASMs, and all that. Yeah. So, they brought in really the Avengers. I think they have all the pedigree because these are not political connections. They got to their position really from the bottom. Yeah. What is interesting, and you mentioned it earlier, is with regards to the history of Sapura and why they got into this problem. You were right. They tried to ride the oil boom and
a bit too hard.
They went nuts on the acquisition spree. 2013, they bought Seadrill, became the world's largest tender rig fleet owner. 2014, they went to buy OMV, which is they didn't buy OMV. They bought Newfield, which was E&P. You think of it as something like Hibiscus today.
Nice.
Yeah. So they went to buy Newfield. So they wanted to be everything. And that was the word that I used. They wanted to be an integrated solutions provider. Right. Everything from all the way from drilling, from acquisition of assets, drilling, installation, engineering, and people, if you believe in that dream, it's good because as an oil and gas independent like Shell, we will want to rely on one contractor. But I think it came at a cost. And when I say it came at a cost, you look at where they are today in terms of revenue against their debt. I just plotted something out, MJ, and I was like, looking at total liabilities against revenue. As you can see, the orange line, it's the orange line is the total liabilities. Right. The purple lines are their
cash from operations.
Cash from operations is the green, black. Sorry, revenues are blue. So you can see even their total current liabilities, which is the purple, not the orange, is even higher than their revenues year on year.
Yeah.
Total.
Well, at least from where I see my eyeballs seeing is that the ratio is shrinking at least.
Yeah, the ratio is shrinking. Especially the current liabilities. Actually, current liabilities went up. Total liabilities, long term debt came down. I think it was because of their maturing debts that were coming. Yeah, and then they had to recategorize and try to. They have tons of assets. And I think that's the story that Tan Sri Shariah has been trying to sell to the investment community as well. But it's very tough to monetize these assets.
It's a big asset.
Oh, yeah.
Not many companies would want to buy it. The market for it might not be big.
To lease it, to buy it. But ironically, I think Dato' Anwar, he kind of hinted that in his press briefing, they need to be a little bit more nimble.
All right.
They may need to shelf this. He said something along the lines as we have to be kind of like a specialist or rather than trying to be everything.
Absolutely, totally agree.
Yeah, and I totally agree. Align with.
So if you were in the CEO shoes, what would you? Obviously, you're from the upstream, right? But what would you specialize in?
I think they should really capitalize on their E&C, their engineering and construction, because that's their strength. Right. And I think last 2021's financial year end, they made quite a sizable profit on that actually.
Okay.
What I think will be even more profitable was actually their exploration and production venture, because recall, MJ, you and I, we did the deep dive on the oil and gas industry 2017 and we crunched the numbers.
Yeah, correct. Yes.
And I did a segment breakdown on all their operating revenue streams. E&P was the highest margin at 30%.
E&P, okay.
Yeah, E&P, which is their new fuel assets now known as, I think they sold half of it to OMV.
Okay.
E&C was actually a lower margin, but the highest revenue. But because they have acquired so much asset, their offshore construction vessels, and all this, right? I think they can stick to that, but sell off all the things that are very small. Their seismic, their geographical, their
the asset planning side, they call it. Right?
Not really. There's a word for it, just like
geological.
Yeah, seismic, the geological seismic surveys. Yes, the seismic surveys. I think that's a very small portion of it.
Okay.
I would get rid of that. And I would try to pare down my debt as much as possible. Right. They may need to sell some rigs, to be honest, because that's really weighing down on their debts. Yeah.
I think with this is a turnaround story. Yeah. It could happen. I hope it happens, certainly. Our attitude towards all companies is that we want them to succeed.
Correct.
Right. But I do think that one thing to consider as a shareholder is, let's say if they achieve in stabilizing the situation, right? What is the upside? And I'm not seeing it. Whatever they're doing is still, again, the old economy kind of oil and gas upstream business. They don't have a clear strategy like a Hibiscus or a Yinsen. So what do you think is the upside, man?
Because of the installation, remember I said the E&C business with all these installation vessels. The upside is they're going into wind farming.
Okay.
Not so much owners of the wind farms, but the installation and engineering expertise to install them. And they're getting, they're going big into China.
Okay.
They're going big, if I'm not mistaken, into Latin America as well. Okay. So that's where they can still squeeze or sweat the asset in a way. Yeah. But in terms of business model, I'm very aligned with you. Yeah. Regardless of whether they're in oil and gas or whatever industry, there's not much recurring business model.
That's right, yeah, that's right.
If you compare them against guys like Dialogues or even, truth be told, Sabah, right? There's some kind of a...
Sabah has recurring, it's just a bit tiny.
Yeah. So as a business model, they always have to chase after contracts.
Yeah, that's right.
And I think that's their pertinent struggle.
Yeah.
In this space.
Yeah.
If they have something more recurring like Dialogue where you have tank terminals and all that, there's some kinds of earning visibility going forward, cash flow visibility going forward. Here, every day you're kind of like, I have to bid. And then out of 100 bids, if your bid rate is, success rate is 20%, then 80% actually goes to waste, So I think that's the struggle that Sapura has to overcome.
There's a lot more to talk about all these three companies.
Yeah.
Especially Sapura. Right. Clearly, it was the interest for Sapura is very, very consistently high throughout the years.
Yeah.
But we don't want to turn this into a full-on podcast.
Correct.
So we got to call it, bring it to an end. Thank you so much, guys, for watching. If you enjoy videos like that, come check out our other videos. Follow us on Facebook, Instagram, Telegram, TikTok. We're pretty much everywhere.
Yeah.
So see you in the next video.
Bye-bye.